I welcome you to the annual general meeting of shareholders of Queensland Pacific Metals Limited.
Thank you very much for attending QPM's 2023 AGM. If you've been a shareholder of QPM for a while or a shareholder in peer companies, then it's been a rough year. And this morning, what I want to do is to explain the progress that QPM has made and how we are trying to set up the company for significant growth and to reward. So here's our usual disclaimer. Please take that into consideration in any decisions that you make as informed by this presentation. So this is a recap over the last 3 to 4 years. For those of you who have been with us for a while, you would understand many of these milestone achievements. So starting from the concept of using the direct nickel process, validating that through pilot plant studies, quite extensive studies, significantly enhancing that inherent process to achieve many things, including halving the energy requirement of that process, adding the production of high purity alumina, adding the production of battery grade chemicals, and hematite sinter product. So in addition to all those achievements over the last few years, over the last year, we've had a number of significant enhancements. Firstly, we've proven that we can produce battery-grade nickel and cobalt sulfate. So that's the first time we've been able to demonstrate that at scale. That's clearly very important since it's the main product we produce. We've also proven that we can produce better than 4 nines purity, 99.99% purity, high purity alumina as part of this process, and that's been done in conjunction with our partners, Lava Blue. We've also proven that we can produce blast furnace grade iron ore sinter products, sinter pellets from our hematite co-product, and that's a significant co-product. We've secured excess ore supply agreements with 4 New Caledonian mining companies, and one of them, SMT, and I welcome our GM New Caledonia here, forgive my French pronunciation, Corinne, Société des Mines de la Tontouta. They have invested in QPM, demonstrating significant confidence in the company and the project. And especially significantly, as indicated by our chairman, acquired the Moranbah gas project and already started to turn that around. So I'd like to talk now to some of the catalysts for share price growth over the next year. You can read that yourself. It's fairly self-explanatory. So over the next year, we expect to complete technical work programs to a high standard that meets the requirements of the debt syndicate and the independent technical experts, as well as the vendor partners that we are dealing with to provide performance guarantees. We're going to firm up the debt and equity finance. Further engagements with the governments, state and federal, we expect to get additional support for the tech project. We're working right now on offtake agreements for hematite, high purity alumina, and some other minor co-products, and to finalise all the necessary supply agreements with the equipment and technology providers. That's on the tech side. On the gas side, we can expect to continue increasing production growth. We've already seen a significant uplift. Increased electricity sales as a result of that increased gas production. And to turn around the asset, which was a slightly distressed asset, or neglected, I should say, asset, from loss-making to profitable. And with the support of Dyno Nobel, to commission a whole bunch of new wells, grow the gas reserves, and develop additional agreements with a number of the metallurgical coal mining companies with their gas supply from their venting and flaring. On top of that gas production, we expect to be able to sell additional gas to third-party users, and a number of those discussions are quite advanced. And to advance our Northern Hub, which is effectively a duplication of gas production. So that's the summary of what we will be aiming to achieve over the next year. So moving on to the tech project. The current position, just to update you where it's at. So virtually all the expenditure on the technical programs as part of the tech project are complete. So the monthly expenditure has already come down quite a long way. We've just got some relatively minor stuff to close out over the next few months. What we have is an advanced engineering estimate process underway. At the moment, it's a very high quality estimate based primarily upon quotes and tenders received. As I said, our test work around the nickel sulfate and cobalt sulfate has proven that we can produce battery grade specification, which is really important. And it's so good that General Motors actually already have a sample and they are going through their internal validation process. Over the last year, we've also achieved a significant further reduction. I mentioned we'd halve the energy requirements. Well, we've reduced the energy demand even further by a further 10% for the tech project. That's not just a cost reduction, but that frees up 10% more gas to go into other revenue generating streams, including electricity. With our equipment suppliers, on whom we're highly dependent, early on in the project, we adopted an approach where we would work only with the best technology and equipment suppliers. When you're a junior company, you need to do that. And as part of that process, we've developed a number of joint development agreements and commercial agreements, and many of those are nearly ready for signing. RPM Global have been appointed as the independent technical experts to evaluate the project. That is progressing well, including visits to Townsville, the New Caledonian mines, various test work and pilot plants, and reviewing all of the engineering and design data. So we have made significant engineering progress over the last year. So just a few pictures to give just a flavour for that. So projects like the tech project are quite large physically, and they're chemical processing projects. So they're really manufacturing plants. They're not a dig and ship quarry. They're actually chemical manufacturing facilities. So you have all the usual manufacturing complexity. And we're well positioned in this design process to knock out a lot of the risk and the risk perception around this project. That gives you an idea of the size of it, or it would if I had a scale on there. It's roughly about 1 kilometre by 1 kilometre, thereabouts. So it's quite a big plant just south of Townsville, the Lansdowne Eco-Industrial Precinct. This next slide shows the leach area. The unique leach process employed by QPM is the direct nickel process that uses the very highly effective nitric acid as the leaching agent. That dissolves nearly all of the ore. That's the core of the direct nickel process, as I said. And it's a part that we have greatly improved to increase the process intensity and reduce the capital intensity. And we've also reduced the amount of water that we need to recirculate. And that means much less evaporation, hence much less energy, and improve the nitric acid recycling process. So a key part of this plant is a company called Ekato out of Germany. They are the world leaders in reactor and mixing design technologies, and we're partnering with them. So you can take confidence from that. The next slide is the pressure ion hydrolysis. It's quite a low pressure process. It's only 5 or 10 atmospheres pressure. Compare that with high pressure acid leach, where you're talking about 50 to 60 atmospheres of pressure. Now, the ore that we process is 40% iron. And in competitor processes, such as high pressure acid leaching, that iron ends up as a tailings. And so for high pressure acid leaching, you end up with about 1.5 tonnes of tailings for every tonne of ore that you process. So how do you get 1.5 out of 1? Well, that's because of all the other junk you have to add in there to make the process work. So you end up with a vast tailings residue. In our case, the pressure ion hydrolysis process takes that iron, turns it into a high purity hematite, and recovers the nitric acid that was used to dissolve it. And we recycle that. And so we end up with no tailings. And instead, we end up with a high value iron product. Now, KBR Plinker, who we're partnering with, Plinker is the German subsidiary of KBR, who's one of the biggest construction and petrochemical and construction companies in the world. KBR Plinker are the world leaders in nitric acid processing and recycling technology. So you see a trend here. Ikato, world leaders in mixing and reactor design. Plinker, world leaders in nitric acid recycling. The next area is what we call the aluminium hydrolysis. The ore has some aluminium that dissolves, and to avoid it becoming a contamination product, we remove that aluminium in a second hydrolysis process. We turn that into essentially a saleable product as well. Again, that is done through KBR Plinker. The next stage is what we call the leach residue filtration and neutralisation. It's a pretty boring part of the plant because it's fairly conventional, just off-the-shelf technology, like some of the things we've talked about. And we neutralise the leach residue using the magnesia, which we produce ourselves, which is the next slide. So that's really neat. That helps make the residue not just a residue, but it's actually a saleable product, an engineered landfill, which displaces quarry sand. These are standard technologies, as I said. Next slide is on our magnesia production. So the ore contains some magnesium. We convert that into a magnesium oxide, which we will use internally, and we will also sell the excess. Again, Hatch and KBR are world leaders in these technologies. So the fluid bed reactor, the FBR, Hatch is a world leader in that. Again, you see the trend working with world leaders. KBR are world leaders in acid plants, nitric acid plants. And when this gets built, this will be the 77th nitric acid plant they built in the world. This is an off-the-shelf cookie cutter design effectively. That's all the fancy photos, but onto government relations. So earlier this year, a number of us were pleased to travel to Seoul, requested by the Queensland Premier to assist in her visit there. It was a great opportunity to spend some quality time with the Premier and the Resources Minister, Scott Stewart, and their senior staff to allow us to accelerate to government discussions and discuss funding opportunities for the project that will benefit the state. And it was especially good to expose them to the quality of the investment partners and off-takers that we have, LG Energy Solution, POSCO, and a potential investor, K-Shaw. By the way, recent independent modelling has shown that this project will deliver $831 million of tax revenue to the Queensland government. So you can see why they are very interested in this project. At the Commonwealth level, I was part of an Austrade delegation of 8 to 10 companies that went to DC, New York and Detroit to meet with US government officials, investors, and obviously the electric vehicle manufacturers. Now, that same independent modelling that I just mentioned shows that the Commonwealth will be a beneficiary from the tax revenues of $3.92 billion over the life of the project. So you can see the interest from the Commonwealth in this project. Now, to move on to the Moranbah gas project, QPM Energy. I'm just going to give a couple of quick slides on that, just to give you an update on where that's at. So this is a game-changing acquisition that the market does not yet value. It does not yet understand it. And the market looks at this and say, well, you were paid $30 million to take it off their hands, so how can this be valuable? So I'll use a simple analogy. Picture someone who owns a store. It's in excellent condition, great supply lines, and it's got a heap of stock, but it's got fixed costs and almost no customers. Well, if you were the owner of that, you'd pay someone to take it off your hands. However, the person who bought it from you knows how to run a store well, and they've got a whole bunch of customers. And so guess what? That person just got paid a bunch of money to take an asset which is extremely valuable in the right hands. And that is why this is a very attractive project. And you've already seen that in the turnaround that we're already seeing and the sales that we're getting for the gas and the energy. So these photographs here just show the scale of the operation. It's a very, very nice asset that we're very pleased to get the timing just right and acquire this project. This just shows a couple of the production nodes. And I still when I look at these photographs, and I was reviewing them last night, I still have to pinch myself when I see what we were not just given, but we were paid to take. And so I just want to publicly congratulate and acknowledge the phenomenal work, of Dave Wrench, John Koo, Dwayne Woodbury, and their whole team in acquiring this asset. This was magnificent work, and it's really helped set up the company, not just for an attractive and profitable business in its own right, but to underpin the technology. So in the short time that we acquired this project in late August, here are some of the things that have already been achieved in those 3 short months. So we've already increased gas production nearly 20% over that time. And there are other ongoing improvements which are in the process of generating additional gas supply. We're now earning significant electricity revenue through sending that gas up the North Queensland gas pipeline with our partner Palisades and supplying that to the Townsville Power Station owned by Ratch, our partner in electricity generation, and we are now a supplier of electricity into the national electricity market. In fact, that gas pipeline, and it's good to hear the words coming back to us from the Queensland government, is being recognised as what is effectively Australia's biggest battery project, because you can pressurise that pipeline when there's excess electricity supply, and when there's a shortage of electricity supply, you can discharge that pressure that you've built up in the gas pipeline through the Townsville Power Station to generate electricity, and that is effectively, you measure it in gigawatt hours, Australia's biggest battery project. But it's even better than that, because you can definitely recharge that pipeline every day, whereas conventional batteries, if the sun ain't shining and the wind ain't blowing, you don't get to recharge the battery. So well done to the team in acquiring that. So great, positive outcome. So the plan for QPME and the gas business is to continue to turn that asset around, and we're spending significant funds to do that. We're in discussions with other coal miners to process additional waste gas from them. We've got a well drilling program funded by Dyno as part of the agreement. It's part of the acquisition. And continuing to improve wells that have been neglected somewhat and turning around their performance. That leads also to an upgrade in reserves through new drilling. And we're in discussions with a number of other gas partners and in discussions with the government to advance the Northern Hub. We call it our carbon abatement project, carbon abatement hub. So just a small example of how you can make money from this gas business. This just shows an example from earlier this year, on the 16th of November, so only a couple of weeks ago. There was a typical high volatility event, and the electricity price went to nearly $10,000 per megawatt hour. In that 5-minute interval, QPME recorded nearly $200,000 of revenue, made $500,000 from that daily operation. These sorts of events happen quite regularly, and they happen more and more, and particularly with an El Nino year, it is forecast that this will be quite a common event. So we have, through QPME, unique exposure to this Queensland, well, in fact, East Coast Australian electricity market. So just a nice note to finish on, a nice little spike there, and it shows how being poised and running this business well, you can benefit from these events. So I will close my presentation there, and happy to throw it open to any questions. I think Nancy has a microphone, I think, to pass around if there are questions for me or for the chair. Thank you.
Sure. My name's Jeff Convine. I'm Director of Gold Coast Retirees Investor Group. God's waiting room, of course, Gold Coast. I was interested in your positive comment regarding the Queensland government, given the tax regime that they're currently... I'm not a politician, incidentally. So if there was a change of government next year, would that be a positive thing for the company?
John, do you want to answer that? I'm happy to, if you'd like to.
The opposition, current opposition, if they are successful both federally and state, because we could have a federal election next year, are aware of our project and are certainly supportive of it. Because of the nature of the discussions we're having with the current governments, both state and federal, it's obviously not appropriate to fill the opposition in on those details. But I can assure you from the discussions that I've had, both in the state and federally, we have support from the opposition. Do you want to add to that, Stephen?
Yeah, that is a very good question. I mean, the good thing that we've achieved over the last year is our profile is now so high that we have very good exposure to both sides of politics. As John said, we need to be respectful of the current governments. We have very good relationships with the Queensland government ministers, so the Treasurer, the Resources Minister, the Premier and the Deputy Premier. In fact, our Chair had some discussions yesterday with the Resources Minister. Clearly, they are very interested in this project. You know, Townsville is an important region, both state and federal level. But this project's fundamentals tick the boxes on both sides of politics. You can be a tree hugger and you say, I love this project, or you can be a raging capitalist and you say, I love this project. So regardless of where people sit on the political spectrum, this is a win-win for all levels of government. So we don't expect to see any particular issues if there is a change of government.
Thanks, Jeff. A good question, and managing those relationships is a very major activity which we undertake. Are there any other questions? Yes, by all means.
So we're all aware of the relatively poor performance in the share price. So would I be correct in assuming that's because the public, and if you like the investment community, just are not really full bottle as to the implications for this project going forward?
I'll let you answer that one, Stephen.
I'll split that two ways. I'll firstly just quickly answer the QPME side. Clearly the market doesn't understand what a phenomenal asset this is. And people look at it and say, well, you're given 30 million to take it. It can't be good. It is a phenomenal asset that we would value at. I'm not even sure, John, whether I can say, but you can look at the forecast numbers of annual revenue of at least $50 million a year, annual EBITDA, I should say, and you can do the calculation yourself what that asset is worth. So that's huge. Now, in the current market, nickel today is about $16,500 a tonne. And by the way, the forecast, for those of you who are boring and look at forecasts for commodities, a couple of years ago, it was forecast 2023, 2024 would be low years for nickel. And it was forecast it would go down to $16,000 or $17,000 a tonne. Guess what? That's where it's at. The same forecasters are talking about the high 20s by the end of this decade. The IEA just came out with a report, I think it was in April or May, forecasting that the nickel sulfate supply gap, and hallelujah, finally somebody is talking about nickel sulfate, not nickel, because most nickel doesn't go into batteries and cannot go into batteries. But the nickel sulfate supply gap that they were talking about by 2030 is 60%. That is off scale in the commodities. That is, let's assume that they're being too bullish. Call it 30%. That is huge, and that's compared to all committed and projected projects. So the world needs probably 50 to 100 tech projects just to close some of that supply gap. Now, the market's short term. We are down a factor of 3 or 4 over the last year. Peer group companies are down anywhere between 2 and 10 times. That doesn't make it any easier for shareholders. And most of us in the company are large shareholders as well. So it's very, very painful. But the fundamentals, for those who have patience, are very, very attractive. I was very pleased to hear, I chaired Australia's Critical Minerals Conference in Perth last week, meeting with lots of senior people. I was very pleased to hear somebody say, and I'm sure they weren't quoting me, but I've said this before, The ESG credentials of this project are stellar. And in 2026, somebody will walk into the showroom in Frankfurt, scan the QR code on the card, and it will tell you carbon intensity, water use, how you've treated traditional owners, tailings, waste, recycling, the whole shebang. There'll be a huge number of criteria. This project is ideally set up. It is by far the best ESG project in the world in the resources sector, and I don't just mean in nickel and cobalt. That primes us well. I was in the States and I said to a number of parties who shall remain nameless, but they were government and private sector parties, I said, today you don't get extra money for clean, green production versus really dirty production. There's no premium, and there needs to be. And they said, we agree, it's not there at the moment, and we agree it needs to be there, and these are the decision makers who make those decisions, and it will come. So it's not a promise, because I can't promise anything, but I'd say within the next 2 years, maybe 5 years, pessimistically 10 years, there will be a significant premium for production from tier 1 jurisdictions like Australia and for clean production. That is going to drive the share price, because most of the world's nickel production is from pretty dirty, and frankly, I've been to some of these projects, pretty disgusting technologies and practices which will not be acceptable in the developed world.
Investor groups, people I represent, are very long term, and I'm familiar with the factors that you're quoting, which are similar to copper, etc. We are in a lull at the moment, and it would seem to me, so I'm a presenter for investors on the Gold Coast, etc. I'm a social scientist by trade. A lot of people say, what's that got to do with investing? Whereupon I fall around the floor laughing, usually, because I ask them, what do they think is directing the world's economies at the moment, apart from the mega trends? But you're part of that mega trend, and I wish you well. I am a shareholder.
Thank you very much. Are there any further questions? Doesn't look like it. So that being the case, I declare this annual general meeting closed at, someone give me the time, please? At 10:40. Thank you so much. And I thank you all for attending.